how should you fill up your lower tax bracket? You know, I talk in a lot of my videos about not letting the lower tax brackets go to waste. And when I say lower, I mean relative to what your tax bracket is going to be in the future. When you have to start taking required minimum distributions or turn on other income, or the tax bracket that your heirs are going to be at when they inherit whatever you don't spend. If your current tax bracket is lower than those future brackets, then you're in a lower tax bracket that you can take advantage of. You can fill that tax bracket up now, make some shifts so that you're in a better position in the future. Maybe have a little lower tax bracket in the future, and you've done that at the current tax bracket that is relatively lower for you. Now, there's more than one thing that you can do in order to fill up that lower tax bracket. Obviously, Roth conversions is one, and that is a good move because it takes money from that traditional IRA and gets it into the Roth IRA where it's always tax-free going forward. But that's not the only option. Let me tell you a story just to give you an example of this. I've got a client that is newly retired. They're married filing jointly. It's their first year of retirement income, and they're in the 12% tax bracket because they're not at the point where they have to turn on those required minimum distributions yet. And because of that, they have some room in this 12% bracket. They could actually have another $25,000 of taxable income this year, and that would still be within the 12% tax bracket. So if they do a Roth conversion, they can get $25,000 from their from their IRA into their Roth and pay just 12% tax on that, so $3,000. But that's not their only option. They also have a stock portfolio, and inside that stock portfolio is one individual stock that is a heavier piece in the portfolio, and that has a 50% long-term capital gain. So if they move $50,000 of that stock, it will trigger $25,000 of long-term capital gain. That'll fill up that bracket. But because they're in the 12% bracket, they're in the 0% long-term capital gains bracket. So there's not going to be a cost to do that. Now, this is an opportunity that doesn't come along very often. And so they're going to take advantage of that opportunity for this year, get that significant rebalancing done. Look at Roth conversions next year. But knowing what your options are and picking the best one can significantly improve your situation down the road.